You know how it goes sometimes, right? A biotech company announces what sounds like a miracle cure. And then boom, practically in the same breath, they're asking for, what, $100 million check? It's that tension we want to dig into today.
Exactly.
Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks.
Glad to be here.
So based on our research, we're doing a deep dive today on PepGen Inc. That's ticker PEPG. And we're looking at data from this morning, September 25th, 2025.
Right.
But before we jump into the company specifics, we kind of need to set the scene, the bigger picture. How's the market looking?
Yeah, good point. And, well, the atmosphere is pretty heavy, honestly. Pre-market futures, they're lower. S&P, Dow, NASDAQ, all pointing down. We're seeing signs the U.S. economy might be slowing down. There are these UK recession fears bubbling up again. And today's got a packed schedule for economic data. Jobless claims, GDP.
Okay.
So what you need to know is this kind of weak backdrop, it limits the cash that's looking for those, high risk, high reward plays, like PepGen.
Makes any big financing announcement like the one they made a real headwind then.
Absolutely a serious headwind.
Okay, so let's talk about the good news first. That scientific breakthrough. Yesterday, PepGen put out some incredibly positive trial data. It was for myotonic dystrophy type 1.
Yeah, and the key phrase they used was highest mean splicing correction ever seen in patients with this disease.
What does that actually mean, splicing correction, for someone maybe not deep in the biotech weeds?
Right, so myotonic dystrophy type 1 or DM1, it's this really debilitating, often fatal condition where muscles waste away. Splicing correction, well, it basically means they saw the best biological proof yet.
Okay.
That their drug is actually fixing the underlying genetic problem causing the disease. It's a genuine scientific win, no doubt about it.
A huge win. But then, almost immediately, the other shoe dropped. The financial reality check.
The classic biotech two-step.
They announced they need to raise $100 million. And they're doing it by selling new shares, which, means dilution for current shareholders.
And they priced it too. $3.20 a share.
Which just raises the question, right? If the science is so game-changing, why dilute right now? Why not let the stock price run up first?
Well, that's the tightrope you walk in biotech investing, isn't it?
Yeah.
You've got amazing science on one side.
Yeah.
But management, they're laser focused on their cash runway. How long can they keep the lights on? Traditional valuation metrics, useless here. No revenue yet.
Right, negative fair value if you try.
Exactly. And you see that tension in the analyst views too. 5 out of 6 are saying buy or strong buy. But there's that one lone analyst with a strong sell. Tells you it's a real battleground stock.
Okay, so valuation models are out. We have to look at market feeling, the sentiment. And you said it's divided. That's skepticism. Does it show up in things like short interest?
It does, absolutely. Right now, about 6.54% of the shares available to trade are short.
Meaning people are betting against it.
Precisely. And based on recent volume, it would take those short sellers about 3.5 days to buy back all those shares to close their positions. So that short position. It shows doubt, for sure, but it's also potential fuel. If the buyers keep piling in, those shorts might be forced to buy back, pushing the price even higher. A potential short squeeze.
And the chart, well, yeah, it definitely shows buying pressure recently. The short-term trend just exploded upwards, blew right through long-term resistance levels.
Yeah, with a colossal surge in volume too.
Which usually signals high conviction buying, right? People really believing in the move. But given the dilution, isn't there a risk this is just emotional? A short-term pop?
There definitely is. And that's the big warning sign on the technical side right now. The stock moved so far, so fast, it's now extremely overbought.
Meaning?
Meaning it's trading way, way outside its normal recent range. It suggests that, yeah, the conviction was real, but that explosive move, it might just be exhausted for now. It probably needs to pause, maybe pull back a bit to catch its breath.
Okay, so putting it all together, we've got revolutionary science but immediate dilution. We've got a chart that exploded but now looks tired and overbought. What's the verdict?
Well, synthesizing all that, our outlook comes out as cautiously bullish.
Cautiously bullish. Okay.
Yeah.
What are the main risks we need to keep front and center?
The big ones are what we just discussed. That technically overbought condition, number one. The weak, broader market we talked about at the start, number two.
Right.
And number three, that psychological ceiling created by the offering price. That $3.20 level is now a really important anchor point in people's minds.
But the science is a real catalyst. That positive data could potentially overpower a gloomy market, couldn't it? If the bulls hold the line.
It could. It absolutely could. And that's why specific levels become critical now.
So what should you, the listener, be watching? Where's the battleground?
Okay, the main fight seems to be around the recent highs. Bulls really need to step up and defend the $5 to $5.50 zone. That area needs to hold.
And for the next leg up?
If you see a solid push above $6.40, that would likely signal the start of the next major advance.
And the downside? The absolute line in the sand?
That has to be the financing price, $3.20. If the stock breaks down below that level, it essentially invalidates the whole positive story that the data release sparked. That's the ultimate O level.
Got it. So there you have it, PepGen. Amazing science, desperately needs capital. It's definitely a high-risk, high-reward situation. The biology is exciting, no doubt, but yeah, that stock chart might give you some heart palpitation.
Could be volatile, yes.
That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next deep dive.